So we're coming into spring of 2025. Uh, the hot market again. Feels like years past a little bit we've been talking about. Um,
Yeah, there's a lot of but I gotta say, like, I feel like this year a lot of people that I talk to in the industry are all kind of agreeing like there's just a different feel
there's more
this year
momentum.
than there
Yeah.
has been the
Yeah.
last couple of years. The phones are ringing more, people are busier. I know I'm seeing it. Like I think that 2025 I think is going to be a good year.
Mm.
And if you follow Logan Motoshami at all,
I love Logan
yes,
Motoshami.
yes, he is. He was talking about this is the first month we've seen both positive year over year and month to month growth in inventory and mortgage applications. So like, kind of
Oh,
everybody's waking up.
Yeah, and if you don't know
Yeah,
who Logan Motoshami is, look up Housing Wire. He's a lead analyst at Housing Wire.
yeah,
He has really good insight into the markets.
and his stories on Instagram are hilarious
yeah.
because
He's a
he's
funny
really
guy.
mean and
Yes.
sarcastic,
Mean
and I
and funny.
love it.
Yeah, he says the
um,
things we're all thinking.
exactly, exactly. It's nice to hear him. But all right, so if someone's looking to buy this spring, let's talk about what they need to do. Because I think a lot of people have been on the sidelines for a while. There's a lot of information, like you might talk to your friends or you might see something, some headline somewhere. But I really want this to be as specific, not like broad strokes, but let's talk about the real specific tactical stuff that can make a difference for someone this spring. Um, on the mortgage side, I'm thinking really being proactive with your pre-approval and having that conversation
Yeah.
early for payment, I think is
Yeah, I
super
think
important.
it's huge for the mortgage side. So speak with your mortgage lender, get that pre-approval done, and then know your numbers. Talk to them because and not every mortgage lender is going to put this out there right away, but find out what does that monthly payment look like. Be prepared for it. Know what your budget is so that you're getting into this. So when you see a house, you can jump on it because I think very similar to a few years ago, and not that the last couple of years haven't been so dissimilar, but it's kind of not as necessary. Houses are going to go fast.
Yep. I think
And so we need to be prepared to jump on it and get that offer in without having to say, oh, now I need to go get pre-approved or now I need to go check on that. Know your numbers before you see the house.
And knowing your monthly is huge because we might see our pre-approval number on paper, and that's cool, but that doesn't mean we're comfortable with the monthly
Yeah,
payment.
right. I
You
could
know,
pre-approve somebody for $500,000, but they don't want to make a payment on a
so
$500,000
that's not
mortgage.
the house you're looking at.
Right.
You know?
Yeah. And that's
Yeah.
always a conversation I have. I'll pre-approve them and then we'll have a conversation. We do what I call a loan consultation where I'll sit on a Teams call with them or on a phone call if they prefer and say, okay, what's your maximum monthly budget for a payment? Because if
Yep.
it's only $2,500, a $500,000 mortgage is not going to work for you.
Yep.
So we figured that out so that they know what their actual range is when they're shopping, so they know that they're going to be comfortable with that payment. And the other thing that I would say too, on the lending side of it and the mortgage side is if your lender has some sort of pre-underwrite program, like at Total Mortgage, we have something called the Green Light program, where we actually will underwrite the buyer 100%, so that when they're putting their offer in, you're not actually providing a pre-approval letter, you're offering a commitment letter pending appraisal.
Yep.
So it's like you've already gone through the underwriting process. So it's the offer is almost as good as a cash offer at that point because there's really the only thing that could hold this up is if something came back with an issue with the appraisal or with title.
And I imagine that program probably takes a little bit of time to do.
I mean, a couple of days.
Yeah. So
it's not a big process, but it's certainly something
it's not something
do
to
ahead of
start
time.
on a Saturday.
It's not something to start on a Saturday. No, I mean, you could start on a Saturday. I can get a basic pre-approval done, but you're probably not putting an offer in using it on Monday.
Yeah.
Timelines. What kind of timelines are we looking at for starting to think about buying, getting prepared to buy, actually looking at houses and putting in offers?
I mean, you want to give yourself as much time as possible. Number one, I think that what I always say is it's never too early to get pre-approved, because even if you're going to be looking a year from now, you want to buy a house. Let's talk about it. Let's do a soft credit pull. Let's look at your income, because maybe you're ready to go now and you're like, well, maybe I don't need to wait a year. Or maybe we say, okay, this is what you need to be ready for next year.
So for a non pre-underwritten, just a base pre-approval, can you do a soft pull for that?
Correct.
And that is, get me if I'm wrong, the type of pull for your credit that does not affect it.
It does not affect you. You wouldn't even know that I did it.
So that's important.
Yeah.
You need to, if you want to buy a house this spring, if you want to buy a house this year, do it now in terms of your pre-approval so you can just make sure when you
Just
talk to your
see where
lender
you
that it's
are.
a soft pull so that it doesn't affect your credit. But that way you have a planning factor. You
Right.
can see where you're at, and that's super tactical advice. It's not super unique to this market, but I think it's a common thing. People are like, oh, I'll wait. It's like, okay, you can do the online calculators. That's awesome. Or you can know your numbers specifically so you have a
Right.
real target to aim at.
Yeah.
I would add on to what you were saying about defining your range for your actual payment. It's important if you're looking, I think we're generally, when we have these conversations, we're talking about like Stratford County, Rockingham County, York County. Like that's kind of our bread and butter for the most part. It's super important to know what it looks like if you're buying a house in Berwick versus Somersworth, if you're looking in Rochester versus Lebanon, because
Next town over, but some big differences.
yeah, exactly. So knowing what those in terms of taxes, that's the important piece of that puzzle. Because a $10,000, $20,000 difference in home price, for the most part, is not going to have anywhere near the effect of if the taxes are $3,000 a year or $6,000 a year.
Correct. Yeah.
So
The big when you're talking about monthly payment, the biggest adjuster of that monthly payment is property taxes.
yeah,
Yeah, it's you can bring up or down your purchase price by $10,000, $20,000. It's kind of adjusted here or there a little bit. Even interest rate, you're not talking about a major shift in rate, but a quarter of a point, an eighth of a point. It's going to adjust it some. But man, if you are in a high tax town versus a low tax town, like you talked about, Somersworth versus Berwick, the taxes are vastly different because Berwick, Maine has way lower taxes. Now, it also has income tax, but that isn't affected in your calculation for the mortgage.
exactly.
So I always tell people if you already work in Maine, it's almost a no-brainer because you're paying them anyway.
Yep.
Might as well pay the lower property taxes. If you work in New Hampshire, though, it's going to be a decision factor for you. And, maybe you talk to your CPA or whatever to look at the implications of that. But when it comes to mortgage payment or monthly housing cost, in Maine, almost always is going to be less.
So our
Except for Sanford, because for some reason Sanford has outrageously high property taxes.
so the worst of all worlds.
Yeah, it's worst of both worlds if you're buying in Sanford.
So I think our first point really is the pre-approval process. Do it now. If you want to buy this year, doesn't matter. I think I can say this, Bill. It doesn't matter if it's with Bill. If you have someone else you're going with, just get it done now.
Just do it.
The second piece of the puzzle, and whether it's with us or someone else, doesn't matter. Just get it done now. Is have an agent that you like, who is well informed, that you've spoken, that you trust, that you're comfortable with, and have the criteria conversation.
And that's
now.
super important. I tell my buyers all the time. They'll talk to me and they don't have a realtor yet. And I'll say, okay, well, I got you pre-approved. You can like me, you can not like me, but most of the time our relationship's going to be over email or by the phone.
Yep.
But man, your realtor, you're going to be intimate with them. You're going to be in houses with them. You're going to be seeing them a lot. You need to really jive with your realtor.
So that's kind of a two-part. It's make sure you're super comfortable with who you're working with, regardless of who that is. We are certainly not for everybody. But we have a specific personality, right? But the second piece of that is your criteria. And I think knowing when to strike is super important. You have to get super specific on your criteria of here is what I need. Here are the things that I cannot, that I can't let any of these things fall by the wayside and forget about them. And then when we buy, it's like, oh, I made this sacrifice and now this just doesn't work for us. That's not to say that there won't be sacrifices throughout the process. Let's be real. The market in 2025 is kind of a mess if you're trying to buy. It's hard. It's not easy. Yeah. There's no.
Well, it's still a seller's market, very much so.
Exactly.
And you can see national data, just talking about specific tactical stuff. You can see national data and maybe house prices or the price growth is stopped or there's a housing excess in some county in Florida. Like
nationally, yes.
Awesome, but that's not here. So
nope.
It doesn't really apply.
I was just at a conference a couple of weeks ago on homeownership, and they had somebody from the National MBA, which is the Mortgage Bankers Association, came up from Washington, D.C. to present about the state of the market. And a lot of what he had talked about was national. And you could see had all sorts of graphs about how it's getting easier nationwide. Like the home appreciation is down, all these things that we're seeing way more listings. That's not the case for the Northeast.
No,
And
and
not just New Hampshire, Maine, but like the Northeast in general is an outlier in that we still are seeing much higher appreciation of values in houses. We are seeing way lower inventory than they're seeing in other parts of the country.
Well-
So you see these stories on ABC News at night or whatever. Even on local news channels, they'll talk about, well, the national average. We're not the national average.
no, the national average should play. I'll go so far as to say almost zero mind in your decision making because Florida, North and South Carolina, and Texas are driving the inventory for the most part right now.
Yeah.
You can buy pretty much any house you want in Florida right now with minimal competition. That is not even close to the case in Seacoast, New Hampshire.
Yeah.
And most people intrinsically know that, but they'll see something on the news that so it kind of goes back to, I guess this will almost be point number 3, is real estate is intrinsically local. It's not a financial product. It's a house. It's where you live. So it matters where you're talking about when you talk about the numbers.
But it's the same thing that people will call me up and they'll say, "Oh, well, I saw that the mortgage rates nationally, the average is this." Yeah, nationally, there's all sorts of things, but you got to look at your own individual situation. So this is again going back to our first point, talking to a lender now about getting pre-approved, showing you where you're at, and again, and you know what? The interest rate that we talk about now is probably not going to be your interest rate when you find your house.
Nope.
But at least it gives you an idea, gives you a framework, a scenario to work off of, and then we adjust from there as necessary.
Absolutely. Go ahead.
Can I expose us to some radiation real quick?
Oh boy, here we go.
So, we like to think, oh, the market's going to crash and I'll just be able to buy a house for basically nothing. 2008, 2009 isn't going to happen again. Right now, at least. And even if it did, based on percentages, that would set us back maybe a year in price growth. So guess what? Like,
Men would rather talk about the 2008 crisis for decades than go to therapy.
yeah. So the thing is, 2008 could happen today and it would bring us to early spring last year, maybe. Like
Even if it brought us to 2023. Or even if it brought us to 2022, affordability would still be upside down.
Well, and it comes down to the crisis, the housing crisis that we're in now is the opposite of the housing crisis we were in 2000. Yes, it's another housing crisis, but it's the opposite. In 2008, you had high foreclosure rates. You had low values, so you had no buyers.
Yep.
Now we have very historically low foreclosure rates. We have high values. We have tons of buyers. We just don't have sellers.
Houses aren't underwater.
Houses are not underwater.
Every mortgage is lower than the value of the house.
I haven't checked it in a while, but last time I checked it, the average homeowner in New Hampshire had $250,000 of equity, and it's probably higher than that now.
Yeah.
Because their values have gone up so immensely. And they're just sitting on, these 2% and 3% interest rates,
The point of, I think, this part of the conversation is that a lot of people looked at houses in 2021 and said they were overpriced. And that was a critical error.
The best time to buy was always 10 years ago.
100% of the time. Yeah. There have only been, over the past, I think, 70 years nationally, there's only been 7 calendar years where there was a home price decline.
Well, and I'll tell you, more than just home price, but mortgage payment. Yeah. So in 2020, if you took the median home...
Oh, this is going to upset me.
Yes. The median home with the median home buyer putting 20% down, their mortgage payment on average is about $1,200 a month. In 2025, that number, the median home, which we know is $500 plus $1,000, the median home buyer at 20% down, their mortgage payment is $3,000 a month. That, by the way, does not include taxes and insurance.
Good Lord.
So we have almost tripled, we've more than doubled, almost tripled what the median home buyer mortgage payment looks like.
So let's give, for the person who is still concerned that things are about to crash, let's give some super tactical advice on how to insulate yourself from something that's not going to...
Let's talk about positive stuff.
There's always a rock could come out from outer space.
Portsmouth could get hit by a meteor tomorrow.
Yeah.
I'm not saying that's impossible. But here's what, if you're really, really worried about that, which is not an unreasonable thing, by the way. even though the numbers don't line up for that to be in our future here, it's not an unreasonable thing to remember the last housing crisis. It's not what this one is, but just to,
Yeah.
I mean, I
just to
wear
put
my
that out there.
seatbelt still when I
Exactly.
drive.
And you haven't crashed in a number of minutes,
And
so it's okay.
Days.
Yeah. But if you're really worried about that, buy below the median. That is the most surefire way. Buy a house that is in demand by the largest number of people, which means
A ranch.
a ranch.
A small
Yep.
ranch.
Yep, a small one-floor ranch, one of the most in-demand houses. We should actually pull some numbers on this, but consistently we see those get more offers than the equivalent square footage on a two-floor home. Because if someone's looking for one-floor living, there you go. And there's more people looking for that and willing to pay more. So that's, if you want to insulate yourself, look towards anything under the median, really. And also look for, this is kind of some more classic advice that's harder to pull off nowadays because of inventory. If it's the worst house on the street, that's probably a good one
Nowhere
to
to
buy.
go but up.
Exactly. That's a good one to buy in that circumstance if everything aligns. So,
and I would also say, I mean, don't sleep on the potential of buying a fixer-upper, maybe with a rehab loan.
absolutely.
I mean, there's a lot. I mean, in New Hampshire, Maine, there's a lot of older houses that are ripe for rehab that you can get less expensive. Yeah, you're going to put some money into it, but there are loan programs like a FHA 203K program or a Fannie Mae Home Style that you can go in and you can buy the house and finance the fixing of it. You don't do the work yourself, but you finance the fixing of it. So, you know, you have 6-9 months after you buy the house and now all this stuff is fixed. And now you've got this great house. And instead of competing to buy the house that was already fixed for $100,000 more, maybe you finance $50,000 or $75,000 to fix the house yourself.
And we've seen this a number of times where we have clients that buy somewhat distressed old New Englanders that were at the time they were built just these grand like manor houses, and they put in the work themselves, the sweat equity, and I mean the houses, like the pictures we get are just incredible. Like, who wouldn't want to live in some sort of like turn of the century Victorian like manor house
with the classic style
with the grand staircase and the molded ceiling, like beautiful houses.
Absolutely.
But I mean, I think especially for first-time home buyers in this market, it comes down to you have your list of needs and wants, and you need to be really flexible with that.
Yeah.
And realize that maybe you need a starter home, which I know the idea of starter homes has kind of been lost in our vernacular. Exactly. But just, you might not get everything you need. Maybe you don't get the garage, or maybe you don't get 4 bedrooms, you only get 2 bedrooms or 3 bedrooms. You don't have kids yet, you don't need 4 bedrooms yet. Buy this house now, build up equity, and then buy the 4-bedroom house in a few years when you do have kids, or whatever the case may be.
That's an important point. I think it's missed and we don't talk about it a lot. 9 times out of 10, if we have a client buying a larger home, and this is not a value judgment of if it should be this way or anything like that with our current housing crisis. No. But 9 times out of 10, that person's coming from a smaller home first before they get that. They start with something smaller, a condo, maybe a mobile home, maybe a single family home that's on a smaller size. And then they upgrade using their equity to make it more affordable at that point.
And reality doesn't really care whether or not something is the right answer.
Exactly.
Reality is reality.
Yeah, that's where
the reality is to get to that next level, like finisher home, that like picture perfect, I'm gonna live in this house my whole life situation, you kind of have to start somewhere these days.
You can make $200,000 a year, or you can
build equity.
You can build equity over time. Yep, that's 100%. Let's see what else. Super tactical, like in the trenches. I think what you just said about rehab loans loops around to our first point perfectly. In that, if you see something that needs to be rehabbed, and it's on a Friday, you're looking at it, it's probably, I don't want to say it's too late and impossible to learn about rehab loans, but really, if you want to set yourself up for success,
you want to have the talk earlier on.
Have the talk when you're not looking at homes. Yeah, preparation is so important for these things. Like a lot of times, I think a lot of people, rehab loans, and then layer that onto what the current market looks like, to have success. Again, not a value judgment. You should be able to just buy a house if you want to, but that's not the market we're in right now. You need to be educated and have some preparation involved and know what you're jumping into first.
Yeah, I mean, there are those buyers out there that they make enough money and their credit is good and they've got the assets ready to go for a big down payment, and they can look at a house on Friday and get pre-approved on Saturday and be under contract on Sunday. There are those out there,
Of course.
but I would say the vast majority of first-time home buyers, especially, and probably the majority of even not first-time home buyers, need a little bit of a ramp up.
Yep.
So
100%.
talk to a lender early on. Have the discussion about what you're looking for. If you're considering the potential for a rehab property, let's have that discussion, because then we can talk about, number one, which programs are available. So the parameters when you're talking to your realtor about it. But also, okay, if I pre-approved you for $400,000, well, you're not looking for a $400,000 house that needs to be rehabbed. You're looking at a $300,000 house maybe that needs to be rehabbed, because now we're going to be looking at that rest of that money that you're pre-approved for being the rehab funds.
Yep.
Right.
Absolutely.
So we want to have those conversations ahead of time, so you're looking at the right houses as well, because the worst thing you can do is go out and start looking at houses and fall in love with them and then find out from me that you can't buy them, because guess what? I don't like it, but I'm oftentimes the wet blanket on these these deals, because I'm the guy that comes in and goes, no, actually you can't do that. No, that's not going to work, and I don't like being that guy, but
Usually you're Disneyland, Bill. Sometimes, on occasion.
I try to be Disneyland, but sometimes I get to play the role of wet blanket, and it doesn't make me happy, but it is what it is.
Let's talk about, this is going to sound crazy and kind of the opposite of what we've been talking about here, how to actually get a deal this spring. Because there is a way. There is one single sorting function on the MLS or whatever search app you're using where you can find a deal. Sort high to low for days on market. That's like the number one. If you want an opportunity to have very little to no competition, just looking for something that's been sitting, 20 days I find is the sweet spot. If it's more than 20 days, you've got a lot more opportunity, because the market has looked at it and rejected it at that point.
Right.
And said, nope, not at this price.
Could mean there's something unexpected about it that's causing people to turn around. That could be pricing. It's just not hitting people's radar because it's over or underpriced. There's a whole number. Something can end up sitting.
If something's sitting 50% of the time, if it's an existing home, and not like, I'm not talking about a new construction that's to be built or something like that. I'm talking about existing homes for this.
Yeah.
50% of the time, there's some horrifying thing somewhere in the house that's causing it to stay.
Yeah. Could be fixed with a rehab loan.
Could be.
And if we go into that kind of expecting, okay, there's something up here, and we're not surprised and shocked and appalled by what we see, then there's some opportunity there.
Yeah, absolutely. And just because another person didn't like it doesn't mean that it's not meet all of your needs. But if something's been on the market for 2 days, you're not going to get it. The chances of you getting a deal on that are almost nothing.
Yeah. Well, and I talked to a lot of buyers, and unfortunately, they maybe they're not paying attention, but a lot of buyers that come to me and they go, yeah, I get pre-approved, and then they send me, oh, can you show me numbers on this? We're thinking about going in 20,000 under. And like you said, unless it's been sitting on the market for that more than 20 days, the likelihood of getting your offer accepted under asking, sometimes even at the asking price, is next to nothing.
Here's a funny rule. Just coming up with this on the spot. This might be a little bit silly, but the day you look at the house, if it just came on the market, buy a gallon of milk. Once the milk expires, if the house is still on the market, it's an opportunity.
Oh, yeah.
You know what I mean? It just kind of lines
up. I thought you were going a different direction with that, but
no.
That's it's a smelly milk way of doing things.
Once the milk smells, you can get a deal on the house. But go ahead.
Super tactical. We saw this the past couple of years. Yet to be seen if it's going to happen this year, but weather.
Yeah, that's a big deal.
We're super weird, and I have no numbers to prove this, but on the days where it was super nice and we had open houses, they were just dead. Nobody shows up.
Everybody wants to be outside. They don't want to be looking.
Yeah, because we had so much rain, those nice weekend or end of week days, everybody stopped going to open houses and went out to enjoy the sun for the first time in, a month or whatever.
And when it was downpouring, we were slammed.
Lines out the door if it was downpouring.
Yep.
Super weird. I don't know if this year's going to be the same, but that's something we noticed.
If you notice it's a rainy spring, that could be something. Go on the sunny days.
Yeah. And again, absolutely no numbers to prove that. Just totally anecdotal, but
there's something to that though.
It's enough to notice.
Yeah, that's something to that.
100%. So really, we talked about preparation. We talked about my weird little way to find a deal. Just spitball a little bit from other agents that you've been working with, Bill. Like any weird observations so far this spring, or
I mean, I think when you're talking about ways to be competitive in this market, um, obviously being prepared ahead of time is important, but also when you're putting in an offer, I've seen things like, not that I want you to do it. I actually think that less now is the inspection waiver becoming as important. I don't think that's happening as much, but appraisal gaps,
Mm,
and especially if you have the
Yep.
money to put down a higher down payment, maybe you put a little bit lower and you do offer an appraisal gap.
yep.
Because that's going to just give the seller a little bit more of a buffer just in case it doesn't appraise for as much.
I'll say this just real quick, not to cut you off here, but have a real good understanding and have your agent show you all of the different things that are negotiable on a purchase and sales because it's a lot more than just price and
Well,
inspections.
everything's
Yeah.
negotiable.
Yeah, there's
Yeah,
so
you
much to
can
it.
do some really eccentric stuff.
Yeah,
Offers.
and
Yeah.
it can make a difference.
We've seen it happen. Yeah.
And you also have to make sure your agent's reaching out to the listing agent to say, hey, what's important to the seller other than price? Like because there
Yeah.
could be
Are they
some
looking for a quick close? Are they looking for,
they need to make sure that the tree that they planted a year ago, they want to take it with them. That's super important.
Yep.
Yep.
Sometimes it's the weird little things that can make a difference.
Yeah.
And
For sure.
in the current market, it's important that you're leveraging, like if there's a 1% advantage you can get,
Take it.
you better use it. Yeah, absolutely.
Yeah.
Um,
100%.
Colin, just like off the top of your head, things that we've been working on that have been working for people.
Definitely like power to weight ratio. So what I mean by that is if you can exactly afford, let's just use 500,000 as an example. Probably don't spend all your time looking at $500,000 houses. Come down a little bit for the asking price, and then you have way more bandwidth and horsepower, or whatever analogy you want to use, to offer on that property. So instead of 100 no's on $500,000 properties, I mean you can pretty much beat the competition out of the market in lower price properties. So that's kind of huge.
Where are you guys seeing maybe doing escalation clauses and offers? Is that something that's
Ooh, so
a fan right now? You a fan of that, or people a fan of that?
I have very strong feelings on that.
Great. Let's talk about it.
So if you use an escalation clause, which just to define what that is for those who don't know, an escalation clause is where you write into an offer something to the effect of the offer is this amount, but if you get one that's more, I'll beat it by a certain amount, like say $1,000, up into my maximum of this amount. So let's say you have a $500,000 offer with an escalation clause that says you'll beat the next best offer by $2,000 up to $525. Here's the problem with that. If it's a competitive property, the listing agent knows what they're doing. My number one response is immediately going to be to counter at 525 and say, take it or leave it. That's what I would do because you're showing your hand completely. I vastly prefer you putting the foot forward that you are comfortable with and not, saying, oh, well, if you do this, you can. That muddies the waters, in my opinion. Not to say that I haven't seen them work. We've used them occasionally and they do work on occasion.
Very situational.
Yeah.
And you have to be super comfortable with that end of the line number.
Yep. Yeah,
yeah.
that has to be, you have to be good to go with that. So,
Right.
I would say just on my end of things, this was earlier. This is still technically the winter. We had some clients who have been looking for a very long time. It's weather related. They went to an open house during a snowstorm that wasn't canceled. Somehow that house didn't end up getting any other serious offers. So just a weird example, weird little thing. We didn't realize it was going to make a difference at the time, but it ended up being the difference for them. They got a great property at this is in Lee. I mean, that was the one we did in Lee recently.
Mm-hmm.
Great property, great price, which sounds like, how do you do that in this market? Well, it's leveraging all of the little things, educating yourself ahead of time, assembling your team ahead of time. Like, just a great example. Now's the time to call around and know what home inspector you're going to use. Figure that out now. Don't wait until, we're right under the gun and it's time to do that. That way, the prices, exactly what's going to happen with it. So I guess, we titled this episode, something along the lines of like how to buy a home in 2020, spring of 2025, but we just call it the preparation episode too.
Yeah, it's all about preparation. I mean, to just do a quick recap on it, I mean, I think the biggest thing is be prepared ahead of time.
Yeah.
It's never too early.
No.
You know, talk to a lender, get pre-approved, maybe do a pre-underwrite so you've already had that part out of the way, because it's all about competition, because as the spring market gets up and going, especially if rates come down at all from where they're at, you're going to see huge competition. I don't even think if rates change at all, you're still going to see huge competition.
Yes.
What are you going to do to separate yourself from the pack? And that the first thing is going to be that pre-underwrite. It is going to help you immensely.
Absolutely.
Just because anything you can do to take fear away from the seller or the listing agent and that this deal is going to close is going to help you immensely. Like we talked before about different loan programs. If you've already been pre-underwritten, half of those questions are gone.
Yep.
You know, and we're not talking about pre-approval. We're talking about actually putting your file in front of an underwriter. That's going to be huge. Knowing your team, knowing your parameters, like where you're at budget wise, everything ready to go, so that when you see a property, you are ready to pull that trigger immediately. You jump on it, you put in that offer right away, because that's what's going to give you that competitive advantage.
Yep. 100%. Absolutely. I think that's a pretty good synopsis of everything as to where we're at right now. I'm sure we'll have another version of this in a month or two of just
Clear as
what
mud,
we've
yeah.
seen.
Oh, yeah.
Yeah, exactly. Of what we're seeing and what's changed. But I think that's a pretty good wrap for now, guys.
Awesome.
Awesome. This is a good one.
Thanks so much.
Take care, guys.